ICC TV18, celebrating 15 years of leadership.
Mere changing of this nomenclature and the sort of gimmickry is not going to serve the purpose.
JDU iska samarthan nahi karti.
Do you have any substantive, meaningful program to reform the Planning Commission which is of benefit to the nation?
So let's wait and see what the government eventually is planning.
इससे पिछड़े हुए राज्यों के साथ अन्याय होने की काफी संभावना है.
It's official. After 65 years, the Planning Commission is now history. Its new avatar is going to be called the Niti Aayog. Niti stands for National Institution for Transforming India. Good evening, Suji.
Good evening, Nayantara. Well, is there anything beyond the new name? The centre says that Niti Aayog will be coming up with tailor-made policies for states and it will be trimming down the centrally sponsored schemes.
You know, but just like the Planning Commission, the Prime Minister will remain the chairperson of the new body. However, the government insists that the new structure, the new organizational structure, is more federal in nature. Good evening and welcome to India Business Hour. And of course, here's wishing all of you a very happy and prosperous 2015. Here are the other headlines we're tracking this evening on India Business Hour. For the third time in a little over 2 months, the government hikes excise duty on petrol and diesel, this time by 2 rupees a litre. Centre hopes to mop up 6,000 to 7,000 crore rupees in the process to fund infrastructure projects. Oil marketing companies carry on making over-recoveries.
Minority shareholders of Wipro Enterprises are up in arms. This after the company decides to squeeze them out of the consumer business as Premji wants to take it private. Plans an EGM on the 13th of January to push ahead with the plan. That's an exclusive.
A positive start to 2015 on Dalal Street. Major indices end a range-bound session with marginal gains. The Sensex reclaims 27,500.
Motown ends 2014 on a steady note. Maruti sales in December rise nearly 21% thanks to the Celerio and the Ciaz. TVS Motors also posts a 20% rise in sales, but M&M and Hero MotoCorp see only a modest pickup.
This year we should reach about 507 to 510 million tons. So that is the target that we are looking at.
After clocking sub 5% growth for 2 decades, Coal India finally set to break the shackles, says the Coal Secretary Anil Swarup, pegs an output growth of 10% this year.
At the start of the new year, India Inc. worries that flurry of ordinances can't change obstruction from states, activists, judiciary and bureaucracy. They don't see growth improving for 5 to 6 quarters.
The Modi government moves to make healthcare a fundamental right. A new national health policy in the works. The draft proposes to increase public expenditure on healthcare.
KV Kamath, PJ Naik, Nachiket Moore and several IIM professors will brainstorm with PSU bankers tomorrow as the 2-day Gyan Sangam kicks off. PM, FM and RBI governor to land on Saturday for the grand finale.
Vijay Mallya and Subrata Roy had a torrid 2014. Does the new year offer any hope to the embattled entrepreneurs? A special report coming up on India Business Hour.
So lots lined up over the next 1 hour, but let's start up with the day's trading action. The very first day of the new year, and it was a positive start on Dalal Street in what was really a dull and range-bound session. Nonetheless, both major indices ended with marginal gains. The Nifty gained just over 1 point as it inched closer towards the 8,300 mark. The Sensex also clocked single-digit gains, but it did manage to reclaim the 27,500 level. Mid-caps fared slightly better, with the mid-cap index gaining over 30 points. Meanwhile, the government, in its year-end review of major FDI policy changes, said that FDI equity inflows of $22.43 billion have been received in the January to September period. This represents an increase of 24% over FDI equity inflows during the corresponding period last year.
And so we're now to this top story that we are tracking tonight. Tomorrow, expect the oil and gas pack to be in focus, and this is why. For the third time in a little over 2 months, the centre has hiked the excise duty on both petrol and diesel. The Exchequer hiking duty by 2 rupees a litre for both branded and unbranded petrol and diesel. The government says this move should yield 6,000 to 7,000 crore rupees for the remaining part of this fiscal, and all of that is going to be used to fund infrastructure projects, especially road projects. The hike will be effective from midnight tonight. But even despite the third round of an excise duty hike, oil marketing companies are making a profit of 4 rupees a litre on petrol. That means they were making $6 a litre before the Exchequer stepped in. And on diesel, the oil marketing companies' over recovery stands at 2 rupees 50 paise a litre. Kirit Parikh, a former member, full-time member of the Planning Commission, and the one who wrote the report accepted by the government on decontrolling both petrol and diesel, spoke to us a little while back. He believes the government is right in shorting up its revenues, and there's nothing wrong with the oil marketing companies not passing on the entire benefit to consumers just yet.
I think the consumers have no real moral right and ground to complain, because for the whole half the year they were getting enormous subsidy, and the government was bearing the cost by reducing the excise duty and passing on all kinds of under-recovery financing in different ways. So now when the prices come down, the consumers should try to balance it.
That's Kirit Parikh's view. Let's get you more reactions. R.S. Sharma, the former chairman and managing director of ONGC, now joining us on the phone line. Happy New Year, Mr. Sharma. This is Nayantara. I want to begin by asking you, what kind of decontrol is this? The oil marketing companies, for the last few months, ever since diesel was deregulated, never passed on the entire benefit to consumers. Clearly, they are offsetting prior losses. 3 times the Exchequer has stepped in and increased excise duty. Is this even decontrol?
Well, first of all, very happy New Year to you, Nayantara, and to all the viewers also. The issue is, I have been calling that this decontrol is a regulated decontrol, because we have seen the government coming in and intervening whenever situation arises. Right now, what we read in the papers this week itself, that oil marketing companies have incurred an inventory loss of 5,000 crores in the last quarter. So the issue is somehow these companies, their financials have also to be sustained. You know, we must bear in mind whenever the issue comes for the issue relating to oil marketing companies, thanks to these 3 companies, IOC, HPC, BPC, their marketing distribution network is so extremely good, and the refineries being in the hinterland refineries, so all that distribution cost and all they have been absorbing. And in a way, it is a relief to these companies that the inventory losses they have incurred, they are getting compensated by the government to allow them to make some, profit on this petrol and diesel. I'm not too sure whether the extent of the profit still being made, are these figures correct or no? But anyway, since you are showing it, I believe that must be true. But I can only say that these companies would not be making any windfall gains despite the retention of this. Because
so you're saying the windfall gains is not truly windfall, because they have huge losses, a huge backlog of losses. They have crude inventories, etc. But Mr. Sharma, and you've headed an oil company, was ONGC, might have been from the upstream sector. But what I want to ask you is, and you yourself said IOC, HPCL, BPCL have fantastic network, fantastic distribution. They are the largest players when we talk about fuel retail. Are they not in serious violation of competition laws of being anti-consumer? 3 companies, exact same pricing for petrol and diesel. All 3 companies making the same margin or losing the same amount per litre when you talk about petrol and diesel. Are they, not in violation of competition laws?
No, I very strongly believe it is not so, because in fact, ultimately the government, what they have been trying to do is keeping the consumer interest in view. So whenever all this volatility in the crude prices, product prices, they have been somehow absorbed in the system. So consumer is not exposed to the volatilities. When the prices, steeply went up, they were protected. When the prices are steeply falling, they are not getting everything in. So system is absorbing the volatilities, somewhere the gains, somewhere the losses. I don't think that is any monopolistic or any undue, advantage. They draw somehow. These companies have been trying to maintain stability in the system at least.
Mr. Sharma, sir, Happy New Year to you, Surabhi here. Let me now shift the debate and talk from the shareholder point of view. The only problem in this entire situation is that these are all listed companies with public money, funding the whole exercise. And here's the question. So the consumer, as you mentioned, is still insulated to a large extent. But it's always, the ball is always moving back and forth between the government and the OMCs and, of course, upstream company like ONGC. Here at a time when we're thinking of the follow-on public offer for ONGC, there's still no clarity on the subsidy sharing formula. And now taxation has started moving up and down on a monthly basis. Forget fuel prices. We're talking taxes now moving up and down on a monthly basis. Do you think that from a market and shareholder standpoint, is this sending very negative messages across?
I absolutely agree with you, Surabhi. Rather, I feel stronger than you on this issue. When it comes to the investors' interest, I don't think that is the last consideration that comes to while taking decisions. These are the listed companies. I have also been telling that investor wants a transparency. The investor wants that if there is upside, that should belong to the investor. If the downside, they have been absorbing. These companies consistently for so many years have not been able to give any returns to the investors. There I am absolutely in agreement with you.
All right, so we can only hope the situation becomes at least a little clearer, or just simply privatize the companies, take them off the market, and then the government and the OMCs can decide what they want to do. All right, thank you so much for joining us. Let's move on to the other big story that we are following this evening. The Planning Commission has been replaced by a new institution named Niti Aayog, or the National Institution for Transforming India. The government has envisaged this body to function as an economic think tank with more participation from states. The new body is expected to drastically reduce the current 67 centrally sponsored schemes and come out with new ones tailor-made for each state. But just like the Planning Commission, the Prime Minister will remain as a chairperson of this new body. Nayantara, I just want to get your sense, because you've been going through the highlights and the details of this new proposal. One wonders, there is a new council that has been proposed, and we'll see membership from, I think, all the states. So how different will the structure of the Niti Aayog be now?
So, I've been going through the functions of now the defunct Planning Commission and what the new body is, the Niti Aayog. And one can't help but feel that the new body is going to perhaps adopt a more bottom-up approach as opposed to the Planning Commission, which had a more top-down approach, where the panel head, the various functionaries at top decided what each state should get,
5-year plan targets,
exactly,
and then move
how
down
much
from
each
there.
state should get. So clearly they're trying to change that. For example, the press release very clearly says that one of the key functions identified is to develop mechanisms to formulate credible plans at the village level and aggregate these progressively at higher levels of government. It also says that it's doing away clearly with that one-size-fits-all approach. As a very senior cabinet minister told me, what works in Punjab doesn't necessarily have to work in Tirupura. So, we need to change that model of thinking. So the new structure also, the one gets a sense, is more federal in nature. Of course, the new body is also going to be chaired by the Prime Minister. But here are the changes now. There's going to be a CEO, and that CEO is going to also enjoy the rank of a secretary level in the government of India. Besides that, the Prime Minister will also nominate the deputy chairperson for the Planning Commission. The Prime Minister can also nominate experts, practitioners from various fields to take part. Planning Commission was also being criticized for being a parking destination for former bureaucrats. So there seems to have been some changes as far as that goes. For example, there will be full-time members and only 2 part-time members, and this will have to be on a rotational basis. So clearly, trying to give a new lease of life to this body to make sure it's no longer a parking destination. So it'll be interesting to see how all of this is going to work out. It's been described as an economic think tank. But still, what I want to understand is that if you're going to have this as an economic think tank, what is the Chief Economic Advisor supposed to do, and what is the Prime Minister's Economic Advisory Council supposed to do? The press release doesn't say those organizations, those structures are going to be subsumed.
Yeah. 3 advisory bodies, that's a lot of advice to handle, I think, even for the Prime Minister. All right, let's move on then. The Modi government has unleashed a slew of ordinances in the last few days after some crucial legislation was stalled in the Rajya Sabha. But India Inc. is not entirely impressed. Kaushik Chatterjee, the Group Executive Director of Finance at Tata Steel, and Shankar Raman, CFO at L&T, spoke with us on our show Indianomics, and they were taking stock of 2014 and along with expectations into 2015. Both gentlemen agreed that the government is making the right noises, but they also want concrete legislative reforms as they feel that ordinances are not alone enough to attract investments.
You need to have permanent set of regulations which actually passes through full consultation and ensures that it is robust enough. So as an investor, inside or outside, there is an element of uncertainty on ordinances, let's face it. So it does not become a permanent law till it passes to the parliament.
Today there is growth orientation very clearly in the minds of government, and the ordinances that we are talking about in terms of relaxing some of the tough legislations into more pliable ones and improving the flow of capital, and on the back of it technology, all of that are good enablers. But according to me, I think we have just showed the way. The path needs to be walked. It is keeping the stakeholders engaged and interested, but we are still, at least in my opinion, a year and a half away before we see on the ground effect and quantitative benefits of all these good intentions.
If you look at it, the Land Act is being changed very quickly because it's being realized that you cannot possibly implement the act, which is a very new act from what was there several decades back. So it is also important to be careful and mindful about what legislations are being put into place. It's not that every new legislation is the right legislation to do.
I think very clearly there is a big step forward. There is a lot of time saving that is likely to accrue to the people who are interested in acquiring land because of these developments. But it still remains to be seen as to how efficient the end-to-end processes. In our country particularly, there is enormous scope for public interest litigation, especially when it comes to very, very touchy subjects of religious structures, utility shifting, etc. We need to wait and watch as to how those things are dealt with. But very definitely, as compared to last week, the situation on the ground this week is better by these concessions that have been recognized and handed over.
And of course, you can catch that entire conversation later on Indianomics. But let's get you some more views coming in as far as the economy goes. Kotak Mahindra Bank Vice Chairman and MD Uday Kotak optimistic about India's growth prospects in the new year. Pegs FY15 growth at 5.3%. In a letter to his employees, Uday Kotak said, and I quote, "As I look at 2015, I think India is going to benefit from a slower commodity price cycle in its macroeconomic aspects. India's current account numbers, inflation and fiscal deficit will over time benefit from these global factors. Macroeconomic India therefore looks better. I am genuinely of the view the Indian marathon is playing its way. I see India having a phenomenal future for the next decade." End of quote. However, there's also a note of caution. Uday Kotak's letter goes on to say, and again I quote, "At the same time, due to deflationary pressures, it will be difficult for India to pick and increase its growth momentum. India has to do a lot more in terms of its structural acts to get the growth engines firing faster. It is here I feel that we have a very significant challenge and opportunity as a country in front of us." End quote. Over to you, Sri.
All right, the big corporate story that we are following this evening, minority shareholders of Wipro's consumer business are up in arms. This after the company decided to squeeze them out. Wipro had demerged its unlisted consumer businesses in 2012. Sajid Mangat is here with exclusive details on what really is going on. Sajid, how much is Wipro offering to these minority shareholders, and why is it that they're still not happy?
That's right. To give you a background, Wipro demerged its consumer division business in 2012, and ever since a small portion of minority shareholders were holding stake in that business. That stake is nearly 3.4% or 1.61 crore shares. Now, what Wipro is doing is it is holding an EGM on Jan 13th with a resolution, special resolution to reduce its share capital to the extent of the shares held by the non-promoter shareholders, which basically means the minority shareholders. Wipro is proposing proposing to buy out the entire minority shareholders by paying 367 per share for the shares they are holding in it, and this is what is irking some section of the minority shareholders who have objected to this squeeze out plan by the company, and also written to the company's top management, including Mr. Azim Premji, Rishad Premji, and the company's company secretary. What we understand from Wipro Enterprises, which is the consumer division, is that many shareholders in its August AGM had sought an exit option from the company since the company is unlisted, and there was no plan in the near future to list the consumer business going forward. They also, and that was one of the reasons why Wipro has come out with this resolution in the AGM to seek approval and grant an exit option to the minority shareholders. The evaluation, which is of 367 per share, has been done by Ernst & Young, and that's how the valuation has been arrived at. And many of the shareholders are now questioning the intention of squeezing out, because they feel that there is a long-term value in the consumer division of Wipro. Wipro would be seeking an approval from the Karnataka High Court after the shareholders approve it. This entire thing has been done under the Companies Act 1956, and hence it will require 3/4 of the shareholders to approve it, and Wipro promoters already hold roughly around 96% stake in the consumer division. So this resolution is just a formality before the squeeze out happens.
Right, thanks Satyajit for joining us with all of those details. January 30 is going to be a big day as far as that EGM goes. After clocking sub 5% reduction over the last 2 decades, Coal India set to break the shackles. That's the word coming in from Anil Swarup, the Coal Secretary. Speaking exclusively to CNBC TV18, the Coal Secretary said output is expected to grow by 10% this year. Just yesterday, the coal sector data for November showed a 14.5% rise in the coal output. Here's more from the Coal Secretary.
My hunch is that we should be moving in that direction now that we have a full-time chairman Coal India as well, and the government is putting a lot of effort to ensure that the production does increase. We are ready with the 5-year plan, and which has the annual targets. It will be formally released over a period of time. This has been finalized in discussion with the new incumbent chairman Coal India. This year we should reach about 507 to 510 million tons. So that is the target that we are looking at.
All right, let's move on to news coming in from Motown. It's a new month and auto sale numbers have been trickling in. How did automakers fare in December? Sonia Shenoy is joining in. Sonia, looks like it's been a pretty decent December.
Well, thanks for that. A long list of auto companies that came out with their numbers today. Let me start off with the best of the lot, which was Maruti. Good numbers, total sales growth of 21%. That's on account of the 2 new launches, Ciaz and Celerio, doing quite well. Then we have Eicher Motors, which reported a strong sales growth in both the commercial vehicles as well as the motorcycle segment. So commercial vehicle sales have grown by about 21%, and the motorcycle sales too were quite strong this time around. Next up, M&M, that was the weakest link of the entire pack. So total sales were down about 8.5% for M&M. That's the auto sales I'm talking about. And the tractor sales were worse. So tractor sales were down by about 27% because of the delayed monsoons. Hero MotoCorp, flat sales this time around at 5.26 lakh units. So just up about 0.2%. And then you had TVS Motor, which saw a sales growth of 20% on a year-on-year basis. So that trajectory on the upside continues. So good going for Eicher, for Maruti and for TVS Motor, while not so great for Mahindra & Mahindra.
So not too bad as far as December auto sales are concerned. With that, we come to the end of this edition of India Business Hour.
And here's once again wishing all of you a very happy new year.
CNBC TV18, celebrating 15 years of leadership.